Hi guys, welcome back to the channel, Subsistence Traveling. I'm your host, Jay. Today's topic is 11 financial stocks to buy now. All right, so the case for financials, right now there's very good valuations, potential for higher interest rates. We've already seen higher interest rates in all parts of the bond market except for treasuries. The Japanification of our economy, which will create higher demand for credit, and potential consumer price inflation. Now, again, the criteria that's used to select these stocks, one is valuation, two is profitability, liquidity and solvency. All companies pay a dividend, and we also look at the fundamentals of the sector/industry. All right, so number one on the list is MetLife, ticker symbol MET, priced at $27.72 with a price to earnings of 4.22, a price to book ratio of 0.4, which is very cheap, and it pays a dividend of 6.35%. Now, this is a life insurance company. The next stock is Fidelity National Financial, ticker symbol FNF, priced at $23.25 with a price to earnings of 5.5, cheap, price to book of 1.19, which pretty much is a little bit above book value, but right at book value, which is very good. It pays a dividend of 5.68%. Now, this is a company that's involved in title insurance, technology related to real estate. So this is a really good stock. Next is Bank of America, ticker symbol BAC, priced at $20.03 with a price to earnings ratio of 7.19, a price to book of 0.73, which is very cheap, pays a dividend of 3.59%. Now, I believe this crisis will create a good environment for banks. Mark my words. Next is First American Financial, ticker symbol FAF, priced at $39.81 with a price to earnings of 6.90, a price to book of 1.01, pretty much right at book value, pays a dividend of 4.43%. Again, this is another real estate related financial. They deal with title insurance and so forth. This is another good stock to own in this for the period that's coming up. Next is Blackstone, ticker symbol BX, priced at $41.74 with a price to earnings of 14, a price to book of 3.97, which is very high, and it pays a dividend of 5.85%. Now, this environment is going to be very good for private equity firms. This is what we call the Japanification of the economy, and private equity will thrive in this environment. That's why you're seeing these high valuations all throughout the private equity space. Next is Apollo Global Management, ticker symbol APO, priced at $31.92 with a price to earnings of 8.2, with a price to book of 5.48, which is very high. It pays a dividend of 11.15%. Again, this is another private equity firm. And again, the valuations in private equity are very high right now because this environment that we're heading into, private equity will do very good. All right, so next is Gladstone Investment Corporation, ticker symbol GAIN, priced at $7.07 with a price to earnings ratio of $20.73, price to book of 0.57, which is very cheap, pays a dividend of 11.88%. Okay, so now this is a business developed company. A lot of people look at these as very risky, but this environment coming up will be very good for business development companies because, again, this is the Japanification of our economy, and there's going to be lots of zombie companies out there. that just live on debt. All right, so the next one is Hercules Capital, ticker symbol HTGC, priced at 6.64, price to earnings ratio of 4.72, price to book of 0.63, which is very cheap. It pays a dividend of 19.28%. Okay, now this is another BDC slash venture capital firm. This is a good company to own. They invest a lot in healthcare and technology. Those are the two areas where they invest in. This will be very good also in the environment because, again, you're going to have lots of zombie corporations and so forth that thrive off debt, and companies like this will definitely benefit. All right, so next is MANULIFE Financial, ticker symbol MFC, priced at $11.34 with a PE ratio of 5.79, a price to book of 0.69, pays a dividend of 7.44%. Now, this is a Canadian life insurer. They operate on a global level. This you see, the life insurers are very tricky because they need higher interest rates, and you're already seeing higher interest rates, but Manulife Financial in this upcoming environment will do very good. All right, so next is One Main Financial, ticker symbol OMF, priced at $15.27, price to earnings of 2.32, a price to book of 0.48, and it pays a dividend of 8.64%. One Main Financial is one of these consumer lenders. They lend to consumers. This will be the type of because I see consumer price inflation coming, and this will be a good stock to own, a good company to invest in. And last but not least is First Cash Inc., ticker symbol FCFS, priced at $67.25 with a PE ratio of 17.2, a price to book of 2.1, which is pretty high, and it pays a dividend of 1.61%, which is, it pays a low dividend, and it's has a high valuation. The good thing with a company like this, they operate pawn shops, and they also give loans. Companies like this usually thrive in a deflationary environment, especially when a lot of people want to pawn their items, sell their used merchandise, and so forth. So this is a decent, looking at the valuation, you could tell a lot of people are holding on to it. Okay, so here are some considerations. This is a very cyclical sector. Okay, so any bad news is going to bring the financials down. They're the first to go down. This is a highly regulated industry. Okay, and the government has a history of picking winners and losers. So especially when you're dealing with bailouts and this is a highly regulated industry where the government could, just say, make any decision any day, so that's something you want to consider. Some parts of the sector require higher interest rates, especially your life insurers and your banks, but you're already seeing higher interest rates. It usually performs poorly in a deflationary environment. Like I said, the minute there's bad news, the financials are first to go down. So this is something you have to take into consideration before you invest in this sector. All right, so here are my final thoughts. Financials can make money in any environment. Okay, if you go through, whether it be a deflationary environment or an inflationary environment, financials can make money in that environment. The sector has very good yields. Okay. Start positions cautiously. Okay. I would advise you guys to dollar cost average down. Financials should thrive in environment of asset price deflation and consumer price inflation. Okay, so another thing you want to consider with these, especially you income investors out there, you know, the government could if the government bail these companies out, the government can also tell them, not to pay dividends and so forth. So that's something you want to take into consideration. As always, guys, like I always said, peace to all.